Hey guys, welcome to my channel. In this video, I'm going to talk about my opinion about gold. So gold just crashed. It crashed 60% from its all-time high. So its all-time high is around 5,589, and right now, it's just down to 4,600 in just couple of weeks. So a lot of people just asking the same question. Should I buy the dip? So I think it might be the wrong question, because the real reason to own the gold has nothing to do with its price charts or dip buying. So it has to do with the one thing everyone calls gold's biggest weakness, the fact that it doesn't generate any income. So I'm going to deep dive into this part. And I think I will show you and I will tell you why that might be actually its greatest strength. Okay. Gold doesn't pay dividends and it doesn't pay interest and it just sits here. Yeah, that's what everyone says about gold. And 1 ounce gold in a vault today will be the same ounce of gold in 10 years or 20 years, and yeah, it won't produce any single dollar of cash flow. That's the standard argument against gold, and on the surface it sounds smart. Yeah, I think that's true, but why own something that doesn't work for you when your own stock can compound, your bonds can pay the coupons, and the real estate can collect the rent? And I think here's the thing most people miss. Every asset that generate yield is also taking on risks to generate on that yield. That yield is not always free. It comes with like something else. Think about this way. Imagine you have two neighbors. One runs a business, a restaurant. Every month he brings in revenue, right? He brings in cash flow, but he also have to pay the rent. He have to pay the staff. He had the food cost. So every few years he have to renovate the kitchen or the whole place fall behind the competition, and the money comes in, but it also goes out. And if a recession hits or a new restaurant open across the street, right? That cash flow can evaporate overnight. And your other neighbor, they own a piece of land. It doesn't generate any income. It just sit here, but it also doesn't have need something else from anyone. No employee, no customer, no supply chain, no renovation. It doesn't depend on the economy being good or on interest rates being low or on any government's policy decisions. And I think gold right now is that piece of land. And then what I have to tell you it isn't just theoretical argument. And let's talk about what is actually happened right now. The biggest, the most profitable company on the planet right now, the Microsoft, Google, Meta, Amazon, right? They are printing money every day, right? They all hit the record high revenues, but what are they doing with the cash flow? They are pouring it right back into AI infrastructure. Hundreds of billions of dollars in capital Capex. For example, Microsoft Excel is expanding over 80 billion on AI infrastructure in 2026. Google, Meta, similar scale. This company, they cannot spend this money. If they stop investing in AI, they might fall behind, right? And if they fell behind, their future cash flow are at risk because they cannot dominate just what they have done in 10 years ago or 15 years ago. They have to all in this AI race. So the cash flow that makes them attractive force that into a spending world where the actually outcome is uncertain. right. They understand they have to spend their money buying chip, building data center, but the outcome, nobody knows whether it is the best way for them to do that. But they have to. So that's the hidden cost of yield. And the cash flow exists. So does the application to reinvest it and the risk that come with that reinvestment. It's not just AI capacity. Let's look at the broader environment last year, right? Like Trump's tariff escalation, they sent the markets into a spiral. And this year, what happened in Iran, right? Like the S&P 500 has a multiple drops of like 55% or more in the past 12 months. And tech stocks, especially tech stocks, right? Everybody knows that. So I think, again, in an era where geopolitics shocks are not black swan, but like the recurrent thing, every asset that generates yield is also exposed to the force that can destroy that yield. And I think gold doesn't generate income, but it also doesn't participate in that kind of risk. So, in my opinion, not generating yield isn't a weakness; it's an immunity. That's my point here. And after that, we are going to talk about some numbers. So now here's the structural argument that, and this one isn't going away. The U.S. national debt, and it just hit about 38.86 trillion. It's growing at 7.2 billion per day, and the M2 money supply, that's all the cash, checking accounts, and the saving in the system just hit a record 20.4 trillion. And here's the uncomfortable math. The US government owns like 38.86 trillion. It cannot pay this back through like tax revenue or spending cuts. The numbers simply don't work. So what's the only option? Print more money, issue more debt, use new currency to dilute the old debt. This isn't just a prediction, right? That's the truth. And it doesn't matter whether the Fed raises the rates or cuts the rates. If they cut, money gets cheaper and the dollar weakens directly. If they raise, the interest payment on that debt becomes so enormous that they need to print even more money to service it. Either pathway leads to the same destination. The purchasing power of dollar goes down over time. This is true for every major fiat currency, not just US dollar, like the euro, the yen, the pound. Every central bank face the same pressure. So when someone says, okay, gold doesn't yield anything, the question is, yield denominated in what? In a currency that is losing purchasing power by design? If your measuring stick in shrinking, the thing that stays the same size look like it's growing, right? Gold doesn't need to generate cash flow to increase in value. It just needs to exist. While everything denominated in fiat get dilated around it, it's like standing still on an escalator that's going down. You are not just climbing, but relatively to everything else, you are rising. That's interesting, right? And let's keep talk about other countries' central bank. Just let's just watch other central banks doing what in 2025. Global central banks bought roughly 1,000 tons of gold, and for 2026, the world gold council projects 750 to 900 tons of additional purchase. And let's see about what happened in China. China's central bank have been buying for 14 consecutive months. Its reserve now sits at 2,300 tons. And here is something most people miss. The World Gold Council estimates that about 57% of central bank gold purchase in 2025 were not publicly disclosed, which means that more than half of the buying was done quietly. I think here is another big signal from China, and that happened in Hong Kong. And Hong Kong just announced plans to expand its gold storage capacity from 200 tons to over 2,000 tons. That's really crazy. And it's building a cross-border gold clearing system with the Shanghai Gold Exchange. That this isn't just about like speculation. This is China's strategy. This is China's infrastructure. And you don't build a 2,000-ton vault because you think gold might go out next quarter. You build it. Why China build it? Because they think that it is more like a restructuring the foundation of their reserve system. China like doesn't believe U.S. dollar anymore, and gold is that option. And again, the central bank they buy the gold for exactly the reason I've been describing. It has no counterparty risks. No counterparty risk means no one can default on it. No government can inflate it away. No company can mismanage it. It's the only major financial asset that is no else liability. When the people who literally print money are choosing to hold something that doesn't print money, that should tell you something. And then we are going to talk about like the Bitcoin. Yeah, because I think some people might ask like, what about Bitcoin? And I think Bitcoin and gold are like playing a relatively related game, but on like different timelines. Bitcoin has so many like the same properties, like the scars, the decentralized, no counterparty risks, and in the long run, and it may take over like some of the gold's role as a store of value. But here's the reality today: gold has like 5,000 years history, right? And every central bank on earth holds gold. No single central banks hold Bitcoin as their primary or the core reserve asset. Maybe in the future they may change, but not yet. So in a world where geopolitical trust is fracturing, where countries are actively looking for assets that have no single nation control, and gold is the only option. The concept took like many years to build, and Bitcoin right now is just 16 years old. So that's the difference from my perspective. So I think everyone should both hold these two assets. It's a better option. Okay, we have talked so many about the gold, but honestly, we have to talk about some risk. So from a short term, gold can absolutely go lower, right? If the Fed holds rate higher for longer and the dollar like stays strong, gold face some problem, right? We are seeing that right now. And after that, we should we know the geopolitical things, right? The world and geopolitical crisis tend to be priced in before they happen. So by the time bombs actually drop, the uncertainty that drove gold up gets resolved, and the gold often like the pulls back. Like that's just what happened in Iran, like recently, right? And then and gold actually right now it has a higher volatility, right? It's more like in a given like if you give a 6-month window, you can absolutely lose your money, but for a long term, you should be fine. So here's my view is like the structural forces, the currency debasement, the central bank accumulation, and the rising cost of the yield in an unstable world. This aren't going away, right? They're accelerating. So if you can buy some like the gold ETF, or if you store some physical gold, they are a good option for you. Gold, it doesn't need like a good earning report. It doesn't need to win in the AI race. It doesn't need any government's permission to hold its value. in a world where everything is trying to generate yield and taking on enormous risk to do it. The asset that simply refuse to play the game might be the smarter thing in your portfolio. So that's today's video. I hope you drop some comments on my video, and I will see you in next video. Bye.